What's going on, guys? Welcome back to SquireTrades for episode 18 of Road to Becoming a Full-Time Trader. It is October 9th at 5:09 p.m. Eastern Standard Time, and the market is closed for the next 51 minutes. Today was a great day. We took a loss early in the morning. We took a pre-market long. Later on in the afternoon session, we ended up taking a silver bullet setup, recouping our losses, and we're heading into tomorrow with a net break-even day that was today. So you'll remember yesterday, if you guys tuned in, we covered Friday's loss, we covered yesterday's win. We also back-tested the silver bullet model that my trading partner and I are beginning to incorporate into one of our execution strategies. Going into today, if you tuned in yesterday, you will know we had a short bias, okay? What we were hoping to see was this and this. I mean, that's pretty straightforward. As you guys will know, if you've tuned in for previous episodes, I tend to be a perma bear. It's just kind of how I was bred. The mentors that I've held closely and learned from over the years, some of them were also perma bears, so I believe I picked it up from them. Anyways, coming into today, here's what I saw when I woke up this morning. And when I woke up, I immediately thought I am taking a long today for a couple reasons. Buy side liquidity here, you have equal highs right there. You also have this liquidity here, you have relative equal high. You also have liquidity up here, and you also have liquidity up here. You guys will know my 4-hour bias comes from using external range liquidity to internal range liquidity and internal range liquidity to external range liquidity. Really quickly to review, internal range liquidity is equated to like your PD arrays, such as fair value gaps, order blocks, etc. External is basically buy side liquidity and sell side liquidity. Okay? So coming into today, what did we see? We saw an internal fair value gap here, and we came down and we took external, right? So at the point that we've taken this external, I know that there are pretty much two things we can do. A, we can continue down and reach into this external and continue our move up. Sorry, I know we can reach down into this internal, our second fair value gap. I believe if we draw a fib, that will probably line up with our 0.5. This will be equilibrium of this range. So we could have dug down into this fair value gap, and at that point, I still would have been looking for longs up to this external range liquidity here. So, with that being said, we dug down into this fair value gap, and as soon as I got to the charts this morning at 7 a.m., I was on to the 15-minute chart. Now, you're going to ask yourself, why are you taking trades so early in the morning? The answer is, I just believed in it, man. I thought that this long was going to be the one that was going to pay. And I thought going into the rest of the day that I was going to be able to hold on to this, leave some runners, and make a lot of profit. So I saw, where was I here? I saw this fair value gap here, I believe. No, where's the fair value gap that I saw? Hang on, I apologize. Is this even today? This isn't even today. What am I doing? This is today. This is where we're at. I am so sorry, guys. Here we are. We are locked in now. So this is what I saw today, all right? I saw this big, large movement up. We came down here. We swept this sell side liquidity here. We then came up. Here's your market structure shift off of this level here. And then after we had our market structure shift, I was just looking for any fair value gap for us to retrace back into. The fair value gap that I identified was this fair value gap here. So I had my entry there, stop loss here. And what was I waiting for? This external range liquidity up here to get taken for a total of 3R. As you can see, I got stopped out, but you can also see that price ends up going in my favor. And that's cool. I love to see that. So here's what happened today as well. I had a training for work. I was locked in. I had responsibilities from 10 a.m. to noon. So at this point in time, I was done. I had got stopped out of my pre-market trade. Market ran without me. That's perfectly fine. No big deal. I took a small loss. It wasn't even a full loss. No big deal. I came back after noon and I was waiting for the silver bullets to present in the PM session. If you're unfamiliar with the silver bullet, basically from 2 p.m. to 3 p.m., you are looking for a 5-minute fair value gap to present, and then you set your limit at the bottom, in this case, at the top of your bullish fair value gap. Boom. And then you set your stop at the first candle and the candle of 3 that create your fair value gap. You'll see here you have your lovely market structure shift. And I took this. This is exactly how I took it. We came down, next candle, dug in. We kind of consolidate for a little bit. I think I'm going to get stopped out. I was really confident I was going to get stopped out. And actually at this point, I had moved my stop a couple different times. I trailed it, never actually ended up getting hit. And then we end up going up. And actually, here's what's crazy. At this point, I was home from work. I actually got into this right before I left work. I leave work at 3 o'clock. So this whole time, I was on my drive home. And then at this point, I was in the gym at 3:30. I saw this. I couldn't be asked to sit there and babysit a trade while I was at the gym. It was just going to mess up my session. I wasn't going to be locked in on doing what I needed to do, and it was just going to mess up the flow. So I ended up taking this somewhere in this range here of like right just above 1R and recuperated my loss, my 1R loss that I had taken earlier in the morning over here. And I ended the day net break even. Here's the thing, guys. Going forward, I will be trading the silver bullet model, okay? And let me just line out what the silver bullet model is one more time. Silver bullet model. You're on the 5-minute time frame. From the times of 10 a.m. to 11 a.m. Eastern, as well as 2 to 3 p.m. Eastern. On your 5-minute time frame, what are you looking for? You're looking for a market structure shift. You're looking for a fair value gap. At that point, what do? We're going to set limit at fair value gap, stop loss at candle 1, and take profit at hard 2R. Okay, so you can see today, what did we have? We had 2 to 3 p.m. Right here was the start of 2 p.m. and 3 p.m. was over here. So within this window, what do we have? We have this bearish structure over here. We come down, sweep all of this sell side liquidity right here. We swept. And we also swept right here. So we came down and we swept this liquidity. Things are looking good for us. And we've already had a pretty bullish day, as you can tell. So we were just looking for a continuation. We had a bullish Asia, bullish New York AM. So coming into the PM session, we were looking for a bullish silver bullet. We came in. Where's your market structure shift? You guys should be able to identify that at this point if you've been paying attention. Boom, market structure shift. And then what do we say over here after you have your market structure shift fair value gap? You set your limit, the top of the fair value gap in this case. You set your stop loss at candle 1. If you guys are unfamiliar with what candle 1 is, to create a fair value gap, you have to have 3 candles. Candle 1, candle 2, and candle 3. And at that point, when candle 3 closes, you have your fair value gap right here. You have your market structure shift. And then you want to set your TP at a hard 2R. And in the case like today, if the market closes, so let's fast forward to when the market was closed, 3 more candles, boom, right there, the market closed. In this situation like today, what you're going to do is at 4 o'clock, no matter where you're at, just close your position. That's it. Because at that point, you will have held until the market has closed, options trading is done, and that's kind of that. Like, there's not going to be any more volatility. The market's not really going to move. So in the case that your 2R TP does not get hit before 4 o'clock, go ahead, close that trade, mark it down, journal it, come back again tomorrow, and that's that, guys. So overall, today was a good day. We learned, we won, we lost some, we stayed consistent, we stayed in the fight. We're just about 1.5R winner away from requesting a payout on my Apex account. And we're about 4R, maybe 5R if you want to stretch it, away from a payout on my MyFunded Futures 50K. Things are looking up, man. We've had a rough month. We had a rough month last month. We had a rough month the month before that. But, we're still taking payouts. We're still making progress. We're still winning trades. We're losing trades too, and that's okay. But at the end of the day, via risk management and via making our winners much larger than our losers, we're staying in the fight, guys, and that's what matters. You need to stay in the fight too. Conserve. If you need to de-risk, de-risk. No problem. If you need to take fewer trades and focus on your A-plus model, take fewer trades, focus on your A-plus model, and scale into those positions and those opportunities when they present. With that being said, guys, I hope you had a wonderful Wednesday. I hope you had a good Monday and Tuesday. I hope you had a good weekend. I hope you've had a good first half of the week. Let's go into Thursday and Friday. We've got news Thursday and Friday. Let's go into it with the mentality that we're going to kill it. We're going to murder it. And if we don't, that's okay. We'll journal. We'll write it down. We'll come back next week and we'll stay on the grind, baby. It's been SquireTrades. Thank you for tuning in to this episode of Road to Becoming a Full-Time Trader. And we will see you tomorrow.